Welcome back to Insightful Value, where we uncover undervalued companies and explain what's really happening behind the stock price. Today we're talking about Sonic Healthcare, a major global medical diagnostics company whose stock has been sliding, and many investors are asking, why is it so low? Is this the perfect moment to enter, or a warning sign? Stick around and let's break it down. As always, this review is for informational and educational purposes only, not financial advice. Don't forget to subscribe to our channel, like this video, and leave your comments below. We love hearing your views. So who is Sonic Healthcare? It's one of the largest medical diagnostics companies in the world, based in Australia but operating across multiple continents. They run thousands of pathology and radiology centers, handling millions of diagnostic tests every year. Essentially, Sonic makes its money from laboratory services and imaging that support hospitals, doctors, and patients. It's a critical service business. Healthcare testing is something society will always need. From a value investing perspective, the company has historically been seen as a defensive play. Reliable demand, recurring revenue, and strong market positions in many countries. Revenues have grown steadily over the years, reaching more than 9 billion Australian dollars in 2024. Margins are not extremely high since diagnostics is a competitive sector, but Sonic maintains a solid operating margin in the mid-teens and generates consistent cash flows. Where things get tricky is earnings. In 2020 and 2021, Sonic saw extraordinary profits because of COVID-19 testing. Those earnings fell sharply once pandemic testing ended. Since then, core revenue from standard diagnostics has grown modestly, but not fast enough to replace the lost pandemic windfall. That's one of the reasons the stock has been under pressure. Investors saw earnings fall back to pre-COVID levels, and now they are adjusting their expectations. In the most recent results for 2025, revenues continued to grow slightly, but net profit fell short of market expectations. Operating costs, wage inflation, and pressure on reimbursement rates in some countries also weighed on margins. Dividends are another key point. Sonic Healthcare has a long track record of paying dividends, and it remains a shareholder-friendly company. The dividend has been gradually increasing over the years. However, after the COVID boom ended, the pace of growth slowed, and the dividend payout ratio has crept higher. For investors who want stable income, Sonic remains attractive, but for those seeking rapid dividend growth, the picture is less exciting. So why is the stock down now? Mainly because earnings in 2025 came in lower than analysts hoped, and management guided for only modest growth in the coming year. Rising labor costs and limited pricing power in some regions have pressured profitability. Investors are concerned about how quickly Sonic can recover and whether it can expand margins again. Could the stock bounce back? That depends on whether Sonic can improve efficiency, expand its higher margin specialty testing, and benefit from demographic trends like aging populations, which drive more diagnostic testing long-term. From a value perspective, the company has strong fundamentals, steady demand, and a healthy balance sheet. On the other hand, short-term headwinds could continue to drag on the share price. Why consider investing now? Defensive healthcare exposure, predictable revenue, global footprint, and steady dividends. Why not? Slowing earnings growth, higher costs, and a reset after the pandemic windfall. As always, we're not giving you financial advice, just providing insights so you can form your own view. And by the way, if you want us to create a custom review of a company of your choice, we charge only $20 per review. Reach out to us at info@insightfulvalue.com. At Insightful Value, we provide in-depth analysis of undervalued companies. We simplify the complex data, highlight what matters, and explain why a company might be worth considering. Whether you're experienced or just starting out, our goal is to make financial insights clear and actionable. You can find more detailed breakdowns of Sonic Healthcare and many other companies on insightfulvalue.com. Thanks for watching. Don't forget to subscribe to our channel, hit like if you found this useful, and visit insightfulvalue.com for more insights.